Hello and welcome to the Your Financial Pharmacist Real Estate Investing Podcast, a show all about empowering pharmacists to achieve financial freedom through real estate investing. I'm Nate Hedrick, and each week, my co-host David Bright and I explore stories from pharmacists all over the country who are achieving their real estate goals while maintaining a meaningful career in pharmacy. Whether you're a first-time investor or a seasoned pro, we're here to provide education and inspiration about the world of real estate. Please note, this podcast is intended for educational purposes only and should not be considered financial or investment advice. Hey, David, how's it going?
Hey, good, thanks. How you doing, man?
Good. We just got off an awesome interview with Rachel Gainsbrugh, someone we've had on the show before, someone in the short-term rental space, and it's got me jived again about finding an STR, my continued never-ending search for my first short-term rental that I cannot find. So it was a good conversation.
Yeah, I know. I have been, as we've talked before, I'm much more in the long-term rental space. Like the short-term, the work involved in the short-term rental space has always had me nervous about jumping into that. But hearing some of Rachel's stories today about short-term rentals that are more medium-term, she mentioned one where she had someone stay in one of her, quote, short-term rentals for 11 months. And I have had people in long-term rentals that haven't made it through 11 months. So like this is starting to sound like more and more doable. Like the gears are spinning in my head as we're talking.
Exactly. So for those that don't know, Rachel Gainsbrugh, she was back on the show in episode 7, way back at the beginning. And she's a pharmacist. She is an investor. She's really in the short-term rental space and has been there for a while. She runs a whole business and coaching program around short-term rentals. Just a really influential pharmacist that we wanted to have back on the show to talk about the short-term rental space, what's been going on in the market in the last couple of months. And also to talk about the new Netflix show that she got to be on, which is pretty darn cool. So just an awesome individual and somebody that we were excited to catch up with.
Yeah, she mentions too how like a lot about her goals and how real estate helps her to achieve her goals. One of the ones that I know a lot of folks talk about is just finding financial freedom and as a part of their financial plan. She mentions how she stepped away from pharmacy, which was just kind of an interest and not truly stepped away. She moved from full-time to a part-time consulting role, but just interesting to see how pharmacists balance that, right? Because we certainly go through a lot of training to get where we are. A lot of folks love to stay in pharmacy. Some folks want to go part-time. Some folks step away, step back, but just that flexibility that exists. I love how her perspective wasn't like anti-pharmacy in any way,
Right.
but it was more just flexibility and how real estate empowered her to have that flexibility. So I love that mindset.
Yeah, and it continues. You can see it throughout her conversation, right? She talks about how pretty much anything is figure outable. We talked about lending and how there was some new challenges there. And she said, yeah, it's figure outable, right? And the same thing goes with their career, right? If you have options, all of a sudden you have options, right? Whereas otherwise, if you don't prepare for that and plan for that, you're forced to make a decision, right? So I really like that a lot.
Yeah, she mentions she covers a lot of ground in the interview too. So there's some things on like cost segregation.
Mm-hmm.
There's some things on taxes and so a lot of those more advanced concepts where we've done deeper interviews with other people just on those really specific topics. Those we'll call out in the show, check out the show notes, make sure that if that fires you up a little bit, like, hey, maybe there's something here. Maybe this is a fit for me. We obviously couldn't cover all of that in great depth in today's episode, but we linked out to other episodes in case you want to go back, re-listen to something else and catch back up with some of those concepts and terms.
Great. Well, hope you guys enjoy the show as much as we enjoyed recording it. And with that, we will take you right to it. Hey, Rachel, welcome back to the show.
Hey, thank you so much for having me. I'm super honored to be back with you guys today.
Yeah, it's awesome. We had you on, gosh, well over a year ago, way back on episode 7, and really excited to have you back on. Just talking about all things short-term rental, promoting a show, all kinds of cool stuff that's been going on in your life. So why don't you fill us in just a little, 10,000 foot view on what you've been up to since we last spoke?
Oh my goodness, busy girl. And thank you for having me last year. I just had such a great pleasure of helping other pharmacists get started with their short-term rentals. So I've been busy doing that. And I've had you on in our little mastermind as well, our small but mighty mastermind. I was able to get casted actually for a TV show that is now streaming on Netflix as well. Just doing some investing, hosting our guests in our various locations. The boys are growing. Let's see. Yeah, that's pretty much it. So good stuff.
I love it.
I know one other thing that we talked about right before we jumped on the show is that you've also had a shift in your professional world in pharmacy.
Yeah, absolutely. So cut back from the W-2 big time. I'm doing a little consulting in IT, but that has been really an eye opener for me. There's some definite limiting beliefs that I had to shift. The numbers made sense, but I knew I had to make a move. My goal is really to move more and more towards the things that light me up. And that's what I had to do. And so in February, I cut back on my full time, and I am doing some consulting now.
Now, I think that's a really something that doesn't get talked about enough is financial freedom and how a lot of folks seek that financial freedom through real estate as a way to have that opportunity that if at some point they want to go part-time in pharmacy or they want to step away or maybe come back later or like but that provides options and that flexibility that you were able to achieve through real estate. It sounds like you probably had that before you stepped away. You stepped away more of by choice at some point, but the flexibility that real estate gave you to say like, today I want to shift gears. I may go back later on. I may not, or I may just do the part-time consulting thing, but this is what is life-giving to me right now. Is that about right?
Yeah, absolutely. And the thing is, it's hard for me to believe that anyone goes into medicine, pharmacy, any of these helping sciences to leave and to
Mm-hmm.
walk away, right? You don't go in to walk away. So it's painstaking. There's a lot of thought that comes into it. There's a lot of education that we went through, right? To go and get to where we're at. And so definitely it's each individual, and I don't advocate, I honestly don't advocate that you quit your job. I really don't. And I'm even surprised that, I made that move because this was my lifelong,
Mm-hmm.
goal is to continue to impact pharmacy on the clinical side. But you just have to figure out where you're at, and phases of life change, and you start making your decisions based on really, what lights you up, what are your goals at the moment, and you can only make the best decision for yourself with where you're at that moment. And so this is what's working for me, and I am loving it. I will continue to soldier on and be that advocate for myself and other pharmacists.
I love that, and I love that you're able to do that, right?
Yeah.
If you hadn't done all the real estate and all the things that go to set you up where you are today, that wouldn't have even been an option, right? You
No.
might have been someone that said, "I want to make this change, and I just can't, and I'm stuck," and that's what we want to avoid, and so that's huge.
No, and I wanna highlight that for a moment, please, because that's where I was in the very beginning. Like, you
Mhm.
graduated from pharmacy school. My husband has a degree in psychotherapy, so we went to private universities with whopping amount of student loan debt, like $500,000, and you don't have a lot of options but
Yeah.
to work and work and work some more. And looking back, I don't try to question myself too much, but looking back, our only, I guess, thought process was we're going to work these student loans to death and pay them off. And that's what we did between two, three, jobs. At one point, we had 5 jobs between the two of us. And that's not something I talk about a lot. But we wanted to get out of debt. And looking back, I was like, was there a better way to do that? Now that I've got real estate and you can make, and I'm not trying to rah-rah it, but when we first got our first booking in the middle of the night at 3 a.m., it was like we just made money while we're sleeping. Like, we didn't punch a clock, and of course there's work that comes into it. I don't want to, ignore that, but it was like, man, was there another way to do that instead of working like all those shifts around the clock, to get that done. So it's definitely a different place to be when you have those options. So thank you for sharing that and reminding us of that.
Yeah, absolutely. It's a powerful thing to be able to see that dollar come in when you're not, like you said, on the clock. So
Yeah.
so we want your take, right? You've got a ton of experience here. Then give us your take on what's going on in the short-term rental market. Then, so again, we spoke to you a year ago, over a year ago. We've had a huge change in interest rates since then, a huge change in market conditions. What are you seeing out there? What's been happening?
Yeah, that's a great question. I know there's a little bit of buyer hesitancy due to the change in interest rates. And so what my conversations have been lately is really getting laser focused on the tax advantages. We're still able to get anywhere from, 70 to 200% our cash on cash return or ROI when we leverage our tax benefits. And as higher income earners, pharmacists, we do get, some, significant taxes, especially if you have a dual income, at those higher income numbers. And so if you can get some of those written off with the STR exception or loophole, STR loophole, don't quote me on it, talk to your tax people. I'm not a tax professional, but these are similar to what the commercial real estate investors are getting, and so you do a cost segregation study. This year, you're able to get 100% bonus depreciation or accelerated depreciation through your cost seg. Next year is 80%, next year is 60%. And so that's really been my focus. Yes, the interest rates are higher. Yes, there are more fees, but if you can leverage those tax savings, you're still winning. So I'm paying more and more attention to my taxes. I'm paying more and more attention to, leveraging those benefits that really the ultra wealthy have been using for forever, right? And so the great thing about short-term rentals, there is that ability to leverage, that for a single family home. This is not a multifamily, REIT with 100 units. This is a single family home, short-term rental or a condo. All of the furnishings, all of those can be written off. And written off, I'm using that loosely. Talk to your tax people. There's probably a better word or way of saying that.
No, but I think that's a great reminder of engaging with professionals when things get complicated like that, right? We had Amanda and Matt back on episode 18, and they talked about a lot of the tax strategies at kind of a 30,000 foot view. And then we had Todd from CSSI back on episode 54, and he went into great detail on cost segregation to break those concepts down. So if you're listening to this and you're like, wait, how do I get these crazy tax benefits? I would dig into those and start there, and then start reaching out to a professional to figure out how this would impact your specific situation in real estate. But you're right. I hear a lot of folks that find those tax advantages to be really helpful in that overall financial plan that involves real estate.
And if you don't mind, I wanted to add one more thing. Do you know how, typically with long-term rentals, you need to get real estate professional status, which a lot of us pharmacists, we can't qualify for because typically we're doing full-time, our W-2. So it essentially is about, the same benefit, if not better, because it's a short-term rental. So long-term rental, you would need real estate professional status to get all of those benefits. But with short-term rentals, all you need to do is prove material participation, which to check off those boxes, you have to have the property in service within that tax year. And then there are a couple of other things which shouldn't be too difficult to accomplish that first year. And then the following year, if you're, strapped for time, you can have someone else manage it. But that first year, if you set it up and you pretty much are in charge of the vast majority of the communication and so on and so forth. Of course, there's a checklist, but that's real estate professional status is really something great to have if you're able to swing it. But if you're not, short-term rentals is definitely the way to go.
Yeah, and there's probably some additional benefit. I know we've talked at different times on different episodes about just that participation, particularly at the front end, how you can learn the business that way really well, which makes it so much easier to hand that off to someone else and then be able to speak fluently with the person that manages that later on. So in addition to the tax side of things, which again, talk with your tax professional about all that, but there can be a lot of just value in understanding the business and diving into that, because short-term rentals has a lot of nuance to it that is different from long-term rentals, is different from other areas in real estate. I know we mentioned interest rates is one thing that's changing. Another thing that's changing is the Federal Housing Finance Agency's fees for short-term rentals, how that jumped. I talked with another investor just a few months ago that had to beat a deadline to get something in before the fees hit earlier this year. So can you give us a little bit of background on those fees for and how that has changed the picture over the last 6 or 12 months in terms of what people can expect when they go to get a mortgage on a short-term rental or a second home?
Yeah, so we're leveraging second home loans still. So 10% down loans. We probably won't qualify very long for those because you do need a full-time W-2 and all of those things. But we're leveraging those, and they haven't been too terrible, honestly, those fees for the second home loans. I'll have to look. My next transaction is going to be probably in a couple of months. And I'll have to look to see what that's looking like and see what we need to do to navigate that because ultimately everything is figure outable, right? And so I do a lender shop. I like to have a great relationship, but I do like to shop for my loans. I will speak with 27 lenders if I have to until I get something that is going to work for me and work for that particular deal. So my recommendation is always shop your loans. If, one lender has certain fees that aren't going to make sense for you or for the deal, shop around. There are 3 different products that we typically like to use for short-term rentals. It's a second home loan. Then we'll look at a debt service coverage ratio loan, which is a DSCR loan. So that's a little bit more of a business purpose, commercial side type of loan. Those are still 15% down. I like to be, have a lot of cash reserves. So for my strategy, I prefer to put as little down as possible. That's not going to be a good fit for everyone. The next lending product, rather, that I like to use is a bank statement loan. So bank statement loans, I haven't leveraged one yet, but I'm looking at one. It's when you have a lot of passive losses or, on paper, you have claimed a lot, like we were just talking about with cost segregation studies. If you're claiming your furnishings by the end of the year, that's like $100,000 potentially of claims that you've made. And so it appears on paper that you've got a lot of losses. However, you have a lot of deposits from bookings and things like that, especially if you have a track record. So bank statement loans are the lending product that are great for entrepreneurs. And so, yeah, just shop your loans and figure out what's going to make a good fit for you.
Yeah, I think that there's a lot of value there in knowing that I think most people are familiar that have bought their own home are used to going and putting, 3.5 or 5% or 10 or 20% down on a home and then moving into it and are generally under the impression that that's what a mortgage is. But I think what you're describing is there's a lot of different flavors of mortgage. The second home loan that you mentioned is a way that and there's all kinds of rules. Talk with your loan officer, your mortgage broker about time that you have to spend in that home and intentions and all those kind of things. But if you use that approach, that can be a way to put only 10% down versus a lot of other loans may require 20 or more percent down. But yeah, then some of these other loan types can be great if, as you're mentioning, the startup costs for some of these investing strategies can be huge and they can make your numbers in your first year look really bad. So talking with an experienced loan officer and an experienced mortgage broker that can help you find the solution to, just being transparent with, this is my plan. This is what I want to do. What's the best way to get there? And again, going back to this theme of like relying on professionals to help with really good advice to help you achieve your goals. And I love that you laid out that menu of it doesn't have to look this way for every deal.
Exactly.
So with that in mind, right? So we're talking about the interest rates changing, the different lending types changing. We're also seeing prices that are softening in certain markets, still sky high in others. Do you see those pricing shifts driving any specific strategies for short-term rental? Is there any types of markets that people are targeting or types of homes, or are you waiting to kind of see what happens? Or, like what's the crystal ball? I know you don't have one, but what's the crystal ball and like what to do over the next 6 months if you're interested in the short-term space?
Oh, I love this question because I think a lot of us have maybe like imposter syndrome. Like when we see someone, in a certain market, we want to run to that market, or
Mm-hmm.
see someone in another market, we want to run to that market. And it doesn't really work that way. You may get a good deal, but we all know in real estate investing, the deal that, your friend just got, you're not going to get that same exact deal. You just need to understand what is going to be a good fit for you. What is your ultimate goal? And reverse engineer into that, right? And so is it short-term rentals? Is it fix and flip? Is it burst strategy? Figure out what strategy and then figure out how you can reverse engineer, the lifestyle that you want. What do you want to do ultimately to get there? And so understanding how to analyze any market down to the penny is the key. Right. And so, number one, before we look at numbers, I always say regulation comes before numbers. having a framework of understanding what the regulations are and not only what's like solidified, but also what's in the draft phases to get a temperature check on that market is your first step. You don't know how many people have come back to me and say, oh my gosh, you saved my bacon from going into a market that had regulatory changes. There was nothing published, nothing anywhere, because my step two is you look for the municipality code. That is step one. Step two is you pick up the phone. You literally pick up the phone and call the county clerk's office and ask them what is in draft. And so there are so many changes and it's ever evolving, especially for markets that are not tried and true established vacation rental markets. And those changes are happening every month. So how would that there's a change that's in place or there's some flux there? You have to pick up the phone and call the county clerk's office to figure out what is in draft and then you take it from there. So analyzing the market, understanding the numbers, I'm looking at, first of all, if regulations are okay, the next thing I'm looking at is what is my budget and what is the revenue that I'm looking to generate. And I'm a big believer if you're able to, and if there are no restraints, to starting in your own backyard, right? I'm a big believer in starting in your own backyard around the corner, 20 minutes away, close by, so that you can kind of, like you said, go through the process of setting up and have an idea of what that's going to look like. So some people, I have a client who lives in Hawaii. He started in Florida, right? Because the cost, right, may be a bit too high. I have clients that are in California that started in the Georgia mountains or North Carolina mountain region or Tennessee. There are regulatory restraints. So there are constraints that causes you to move out of state. So, and that's doable and figure outable, but there's definitely a way to start in your own backyard if, those restraints aren't there. And then you start to understand, number one, what is the travel pattern? Is there a need? And so I do a quick search online to see what the occupancy rate is. And number two, I'm looking for growth in a market because I want to understand if my market is dying or thriving. Because here's the deal, everyone's talking saturation, saturation. There's like 7,000 more short-term rentals. Well, is that saturation really? Because that's a scientific and economic term, right? Saturation would be reflected if we have a significant increase in listings or the product and a significant decrease in the revenue overall. And so we want to look at both numbers. I analyze if there's a 30% increase in product, I want to see a 30% increase in revenue also. If I don't see that, and like maybe a 10% increase in revenue, then we do have saturation potentially. And this is a market that is not thriving, it is dying. But if there's a 30% increase in revenue or a 35% increase in revenue, that tells me there's a demand for that market. People want to come here and they're willing to pay, the top dollar or even more to be in that market. So those are kind of the pillars that I look at, so to speak, as far as what markets to go to next.
Yeah. That regulation factor, I think, can't be understated because, you can get yourself in a world of hurt if you buy somewhere thinking you can do short term and then you can't. And same with the dying and thriving. I love that concept. What resources do you use or do you recommend that people use to understand if a market is dying or thriving as they're looking across the country trying to figure out where might I want to invest?
Yeah, so that's a great question. I am using AirDNA, which is the the company that casted us, that worked with the casting company for the show that we'll be talking about in a moment. But yeah, I'm using AirDNA, and within AirDNA, it's broken up into three segments. So we're looking at the historical, which is the top portion, and you want to see the number of listings. There's a month to month breakdown. So say you want to look at July's numbers, and there were maybe 3,000 listings in a particular city. And then you want to go down to rate. I think it's rate or revenue. You want to see in July of this year, how many dollars were generated in the market as a whole. So you're going to have those two numbers, and that'll be like your one subset. And then you want to look at July of last year. Also, the number of listings to compare the growth or the reduction. And then you want to look at the revenue generated from July of last year as well. And that's a starting point. And if this is a market that has huge fluctuations, you're going to put some money on escrow, you're going to want to do month to month. You want to do July you want to do
Mhm.
August, you want to do all of the months, just to see how that looks because the markets are very much seasonal markets. So you want to look at that. And this is not the free version. Now, every DNA has free version. So freemium is what I call it. So you can look at occupancy, overall occupancy in the free version. So occupancy is my starting point. If it's less than 40%, I'm 50%, I'm not interested. It tells me there's not a demand in this market overall. So I'm not even looking. But if it is 50 or greater, I'm very interested. And then I'll go ahead and pay for a month. You can go month to month, cancel it. There's no obligation to get more granular, especially if I'm going to be putting money in escrow, then I'll go ahead and pay to get a little bit more granular.
No, I love that. I feel like that's a very practical tip as you're trying to do that just back of a napkin analysis of is there enough demand in a market to make a short-term rental successful? I feel like that's a great tip. I love that. When pharmacists, obviously we talk a lot on the show too about how pharmacists are pretty risk averse and they like the safe bet.
Mm-hmm.
I would imagine that you're also running into pharmacists, kind of like the Hawaii example of, I don't know that I want to buy $1 million house as my first investment ever in real estate. Like that just gives me a lot of heartburn. So for folks that are looking for a lower price point, I know a lot of people think like the mountain house or the beach house, like that's a short-term rental. But can you share other examples where people have made short-term rentals successful at a lower price point that might be a little easier for pharmacists to jump into?
I love that. And that's really where I started myself. So it wasn't the lowest price point, but I would say it was a lower price point because good thing in Georgia, the cost of living is much lower than a lot of parts of the country. And so our very first investment was 290K was the property. And we were able to get like a 5% investment loan down from a local bank, which was like a family office of physicians or something like that. So going local can really pay. But that was the first one. And today, honestly, I haven't spent any greater than 462K to date, So I range anywhere from 175K to 462. I do have a project down the pike that's going to be closer to the seven-figure range, but that's just from 1031 exchanging into bigger and better. But overall, I haven't, gone greater than 462. And so what I stumbled upon, which is surprising to me, and this is a sector that I've become quite the little specialist in, is the midterm rental strategy for, insurance clients. That has been really, really thriving with the properties that we've selected in the suburban markets. So when I say starting your own backyard, some of you are living in suburban markets. If there is a deal around the corner and the regulations do not ban short-term rentals, that could definitely be an option. And so what I leverage is a tool that's a dynamic pricing tool. I turned it on, and this was a property that was generating $1,800 a month as a long-term rental. The owner was the CFO for a sector of the federal government, and she was coming up to a deadline, a tax deadline, had to sell it, and it was on the MLS sort of kind of because it was for sale by owner. She was out of state. There were realtors there wanting to list it. She just wanted to do her own thing, and we were able to get the property locked down. And so purchased that property, added probably $30,000 worth of work into it just to update it. So as soon as I turned on the dynamic pricing tool for this $462,000 home, again, $1,800 a month is the rent that she was collecting. The tool for a 30-night stay, and I was going to go 30 nights for that first month as I was working on onboarding a new cleaning team. The tool listed the property for $28,000 for 30 nights. And I was like, okay, that is outrageous. That is ridiculous. There's AI involved. I said, okay, I'm going to have to turn it off and train it, but it got booked. It got booked that month. And I was like, what? And then so the next month it got booked for 21,000, then 15,000, and now it averages at about 22,000. That's the one that you saw on the show. And so the avatar for that was very surprising to me. The first avatar was the executive director of a very famous zombie series, but afterwards the avatar were insurance guests. So whenever someone within the same community school district encounters, some type of catastrophic event that occurs to their home, based on their coverage and their policy, they can leverage an allotment to stay in a temporary housing situation. So larger family, imagine a larger family, and we've hosted a family of 10. She said to me, imagine cooking for a family of 10 at a hotel.
Yeah.
That's not going to be comfortable. That's not going to work. And so our home has been used, to house these individuals, and we're paid directly by the temporary housing agency from the insurance adjuster.
I love that. And this is the show. This is the house that was on the show, right? We teased this at the beginning. So you and Jesse went on Buy This House on Netflix. Definitely recommend checking that out. Tell us about that experience. Like, what's it like to be famous, Rachel? I feel like I'm talking to a celeb. It's pretty cool.
You are too funny. Oh my goodness. No, it was a whirlwind. Honestly, it was hilarious because that particular property, I think it garnered some interest with AirDNA. They saw the numbers on the back and they're like, oh my goodness, this house in this suburban area. Like, people ask, what even is in this area? Not much. These are homes and schools, good homes, great homes, great schools. That's it. But we did know that we're going to have an influx of the film industry. And that's who we really thought we were going to be serving. But ultimately, we ended up serving, primarily the insurance guests. And that's a midterm rental strategy, which is, 30-night minimum. Imagine if you have a fire, that's going to be at least 6 months to remediate something like that. So it ends up being really long-term sometimes. We've had guests for 11 months. That's a long-term guest. And at those higher rates. But AirDNA, they saw that. They had the casting company reach out to us. I was like, okay, that seems cool. Didn't think we would get selected because we have no stage presence. It's like, okay, imagine a pharmacist on a Shark Tank / real estate reality show. Like, not even like, that's not on the roadmap anywhere.
I think you guys killed it. I think you guys are great. Awesome. If two boring pharmacists like David and I can podcast, you guys are awesome. So,
oh my gosh, no, it was such a great experience. So they filmed on site at the property, and then they flew us out to Albuquerque, New Mexico, on the set of Breaking Bad and Better Call Saul.
Wow.
Which was interesting. And it was just such an interesting experience for sure. It wasn't, just full transparency, it wasn't as like glamorous as I thought it was going to be in terms of, the flashy lights. At one point, it was like a lot of waiting and then a lot of hurry up, but then a lot of waiting. At one point, I was just like laid up on the floor. I'm not used to like being held hostage like that. Just sit here and wait. It's like, I need to go somewhere. So that part, so that's when I was like, I was speaking with a friend who's an actor. He goes, that's why you need a stand-in, someone to stand there and wait for you. I was like, yeah, I need a stand-in.
Maybe a few more shows, then you can start hiring a stand-in next. I'd love it. Well, that's cool. Well, I definitely encourage people to check that show out. If you've not had a chance to, it's on Netflix. It's called Buy This House. Really awesome. The show itself is great. And then again, the episode with Rachel was really fun because it was cool to see on there. So great stuff.
Oh, thank you.
It's fun too, because you said that was taped a while back already, which is the natural delay. And so you've already grown and done a lot since then. I'm curious now what looking forward looks like. You already kind of mentioned that you may close another house in the next few months. I know one thing that people are asking a lot is, are experienced investors still buying in this market? And then has anything changed for you, or what's your next year or two goal look like?
Yeah. And so the reason that I'm a little bit different from the other investors is, again, I have door, envy like everyone else. If someone comes up to me, I have 100 doors, I'm like, ooh, that's fancy. But again, reverse engineering what I want my life to look like. Less is more for me. And I really believe from the bottom of my heart, you only need one or two just really well-positioned properties as short-term rentals to be wildly profitable, like beyond your wildest dreams. And so our approach is bigger and better. So we have reduced our portfolio a little bit. We've, anywhere from 2 or 3 properties that are older, not performing. We've shaken it up, a bit, and then we're moving towards bigger and better. So we're going towards newer properties because that's the fad. Everyone wants the newest property. I have a waiting list for a property that hasn't even broken ground. I was like, hey, I'm building this property. Who wants in? They're like, I want to be first to one of Rachel's properties, so they want the newest. And I'm like, okay. So there's definitely a demand when it comes to short-term rentals. You want to have a property that's pretty, well appointed. And so for us, it's the properties that are requiring constant maintenance, getting the complaints, and we just can't get over that edge. We're repositioning those, and we're piling up cash for newer. We're building, and so that's what's next for me. So having a beach build complete and launching another, and of course continuing to support my fellow brothers and sisters at Arms in Healthcare, creating a retreat experience. We have a live event, a small live event coming up at a retreat, like retreat style. Guests are tentatively Amanda Hahn, Avery Carl from the Short Term Shop, as well as a software developer from Rank Breeze, Calvin Ma. We've invited him. We're waiting for his confirmation. And Annie Sloan from HostCo. And so what she has is another software product where you can upsell the items within your property. So, again, less is more. I'm minimalistic in that way, but what does that mean? That means that property, you can really pour your attention into it, right?
Mm-hmm.
So, and just squeeze every bit of juice out of it. So if my guest says, I love your mattress, there's a barcode. You can go ahead and order it and it will be sent to your home.
Cool.
And Rachel gets, her cutbacks as well, right? For almost anything in the property. And so that is part of the process for us as well, generating passive income within a pretty active income industry.
Wow.
I love that. I love the intentionality and the strategy and just the thoughtfulness that you've put into, like you've said, making sure that real estate helps you achieve your goals, and that you're not answering to real estate, but real estate is helping you get where you want to go. So I love that. If people want to learn more about you, the show, your coaching program, your business, where can they go?
The best place to go is grab my free tool, 75gems.com. That's 75gems.com. So that's a list of my 75 cities with the highest profitability for short-term rental, which is an ugly spreadsheet, but everyone loves it. And we update it quarterly with the cities that I'm looking at to invest in next.
Awesome. Well, Rachel, really appreciate you coming on, joining us again. Always an absolute pleasure to talk to you. Congrats on the show and the success. And just, again, wonderful to talk to you today. Really appreciate it.
You as well. Thank you so much for having me.
Thanks so much.
Thanks for listening to the YFP Real Estate Investing Podcast. If you like what you heard on today's show, please leave us a review and subscribe to the show so you never miss an episode. If you have a question, know someone that would make a good guest, or want to connect with Nate or David, head on over to yfprealestate.com and join the growing YFP Real Estate Investing Facebook group. As we conclude this week's episode of the YFP Real Estate Investing Podcast, an important reminder that the content in this podcast is provided to you for your informational purposes only and is not intended to provide and should not be relied on for investment or any other advice. Information in the podcast and corresponding materials should not be construed as a solicitation or offer to buy or sell any investment or related financial products. We urge listeners to consult with a financial advisor with respect to any investment. Furthermore, the information contained in our archived newsletters, blog posts, and podcasts is not updated and may not be accurate at the time you listen to it on this podcast. Opinions and analyses expressed herein are solely those of your financial pharmacist, unless otherwise noted, and constitute judgments as of the dates published. Such information may contain forward-looking statements which are not intended to be guarantees of future events. Actual results could differ materially from those anticipated in the forward-looking statements. For more information, please visit yourfinancialpharmacist.com/disclaimer. Thank you for your support of the YFP Real Estate Investing Podcast. Have a great rest of your week.